Welcome everyone to Daily Rates Live with the Mortgage Calculator. Today we're going to go through some live mortgage rates, and then we are going to do a deep dive into HELOC Combo Loans. So we'll wait just a few minutes here to get started. Let us have a chance to get live on all the different platforms. We put the comments there up on the screen, so feel free to drop any comments there in the chat as you tune in. Hope everybody's been having a great week so far. And we appreciate all those tuning in nice and early. I see some comments already coming in. Appreciate it. We'll get started here in just a moment. All right. So it looks like we are live on all the different platforms. We can get into it. Remember, as you tune in, keep dropping comments there in the chat, and feel free to drop any questions you have as we go through our deep dive topic here today. You can drop any questions in the chat. We can answer those for you. So welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And we do this show every morning where we go through live mortgage rates, and then we do a deep dive into a different loan topic. Today's loan topic is going to be HELOC Combo Loans. So our sales manager, Jose Gonzalez, with 28 years of experience, is going to do a deep dive into HELOC Combo Loans shortly. But before we do that, we'll do what we do every morning, which is go ahead and pull up our pricing tool and go through the live rates. So Nick, if you're ready, let's pull up the pricing and see what the market is looking like for this morning.
All right. Switch my screen and we will check it out. Right, this is our pricing tool for our team of mortgage professionals. This will show us the general rates and the APR for today. It is October 3rd, just after 11 a.m. So most of our programs have live rates. Hopefully all the craziness has subsided a little and we have some better results today. But if you'd like a full breakdown, a full loan estimate of all the fees that get put into these APRs, please get with one of our team members. We have over 400 licensed loan officers in 24 states for primary homes, and we can do our investor business purpose loans in 44 states. For our demo today, we will set up a few scenarios using the same settings here. So we'll always set a $400,000 loan amount. We'll set the LTV to 80% loan to value. We'll set the desired price to 99. It means we're going to ask the computer to find the best rate at one discount point in cost. And we're going to compare our programs. We'll start with conforming conventional. We'll check out FHA next, as usually the next best option. And then we'll go into our expanded guidelines where we have over 5,000 additional programs using alternative income. We also have VA and USDA. VA is only for eligible vets and active service members. If you are eligible, we can quote it in a couple clicks. Just let us know. And same with USDA. We can quote it no problem. Property just needs to be in a USDA eligible area. Not many properties are. We'll start today with a conforming conventional. We'll do a purchase, 30-year fixed, primary occupancy, single family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, use an estimated FICO score of 760 and an estimated debt to income ratio of 40%. So with these settings, as we do every morning, let's see what the markets are doing. All right, a little more standard there. Yesterday was a little bit crazy. There's still some non-agency products showing up, but this one is the correct product, 7.75 rate, 0.875 discount points in cost. Puts our final APR at 7.912. So conventional did go up a tad there over the last week or two with the news. Now, let's switch over. If our customer doesn't qualify for any reason for conventional, usually the next option we want to check out is FHA. So we'll set up the same exact scenario, keep everything the same. However, we'll select FHA, which does allow a little more leniency on credit issues, as well as a much higher debt to income ratio, but we'll keep everything the same so we can compare the APR apples to apples here between the programs. FHA this morning, 7% rate, 0.675 discount points in cost, puts the final APR at 7.581. So in this case today, FHA is a little bit cheaper if our customer qualifies for both. But if our customer must use FHA, definitely a good deal here. This APR does include the upfront and monthly mortgage insurance that is required for FHA. So definitely recommend our customers that qualify for both check it out. It's a little bit cheaper today. And our customers that must use it, that's definitely a very cool new feature. Now, where we love to specialize here at the Mortgage Calculator is if our customer doesn't qualify for either of the standard programs. Many other banks or lenders will have to deny that customer, but that's where we love to help with our expanded guidelines, also known as non-QM, where we have 5,000 additional loan programs beyond the standard. So if we select expanded guidelines, non-QM, everything will stay the same. However, we can choose a new income option now. So full doc is what we use for FHA and conventional. That's 2 years of tax returns. We'll typically select this option to use an asset related or business bank statement. The investor programs are only for investment properties. Personal bank statement is the most popular. That's what we use for our demo, as we do every day. We also have RSU, stated income, BOE, 1099, P&L, no income, CDFI, all kinds of options. But we'll do our demo today with our 12-month personal bank statement, and that's for our self-employed borrowers. Many times it's our self-employed borrowers, when they submit 2 years of tax returns, may have different write-offs and may not qualify at all, or just may need a little bit more income to get the home that they're looking for. So we will solve that problem using no tax returns at all, just their last 12 bank statements, to determine a debt-to-income ratio of 40% in our example here, using just their cash in the bank, no tax returns at all. So most of our self-employed borrowers will qualify with double or more income using this method and can therefore get that home they really want. So let's check out the non-QM solutions today. Woof. Smoked 2 programs beating conventional today. So that's pretty crazy. So we have a 7.5 rate for 3.25 discount points and cost. So obviously there's more cost associated with the non-QM typically. But notice our APR comes here almost at FHA levels. It beat conventional by quite a long shot today. So when conventional and FHA are going haywire, non-QM programs are pretty steady. That's definitely why we recommend all of our borrowers out there check out the non-QM options. And this option is also non-QM using bank statements. It also beats conventional here. 7.75 rate, 1 discount point in cost, final APR of 7.817. So first live show we've ever done where 2 different bank statement programs beat conventional just because of the way conventional rates go a little bit haywire with the markets and the news. So definitely check out these options. Notice there's dozens of other options, some at a little bit higher costs, may allow things like bankruptcies and foreclosures and other credit events, and may allow different ways of calculating the income. So please get with our team. They'll find which one works best. But we're actually beating conventional today, which is absolutely amazing. And before we pass it over to Jose, we always want to do some live pricing for investment properties. So we love to work with investors, tons of great options. We'll set up the same exact scenario, 80 LTV, 20% down payment, and we'll compare our 2 options for investments. We have conventional options, and we have our non-QM options. Remember, the government programs, FHA, VA, USDA, do not work for investments. So we'll start with conforming conventional. Everything will stay the same as all our demos. The only thing we've edited here is the occupancy. So let's check out the conventional investment programs. And about the same as it was yesterday, 7.875 rate, 3.875 discount points and cost, which is getting crazy, for a final APR of 8.138. So again, conventional reacts with the markets pretty reactively. So this option I would probably not recommend to our customers. Unfortunately, with conventional, there are no options for 1 discount point. 3.875 is the best deal, and that's still $15,500 in this example. Most investors, and I would recommend, to check out the other options where they can save this $15,000 towards something else. And we can find a program where we can raise the rate a little bit to reduce the cost. Unfortunately, with conventional, Some of these programs down here wouldn't even be legal to offer at this cost. So definitely not good for conventional for investment at the moment. That's what we love to present our final demo here for our non-QM investment property options. So I'll set up the same scenario, investment property, 80 LTV, and this time we'll choose non-QM, also known as expanded guidelines. First thing we must select is our income. The most popular income type for an investment property is going to be our DSCR because it doesn't actually require any income or employment or anything to do with that from our borrower. We simply use the estimated rental income from the property to determine a DSCR value. It stands for debt service coverage ratio. If the estimated rents can cover the expenses, the PITIA of the mortgage that we're proposing, aka the property cash flows, that's a ratio of 1.0 or higher. If the property does not cash flow on a monthly basis, that's a ratio under 1. We still have options for that. However, for our live demo, we always put 1.5, which is the highest value the program accepts, so we can see all the options pop up. And the final thing is a prepayment penalty that is standard for these investment property non-QM programs. So 3 years is standard. That's what we always select to see the most options. We can choose 0. That will limit the options that show up and cost more. We could also choose 5. That will again limit the options, but save our customers some money in some cases. To show the most amount of programs, we always choose 3 years for our demo so we can see the most common options. So with these settings, let's check out the DSCR options this morning. Ooh, not quite beating conventional, but really, really close. I was hoping this was going to beat again today. So primary non-QM beating conventional today. DSCR just a touch above here. Best option, 8.25 rate, but only 0.975 discount points. So our investors happy here. Went from $15,000 to $3,900. But the APR is a little bit higher, 8.316, which is just a touch, about 0.15, I believe it is, over what the conventional was. So almost identical. I'd say 99% of investors, when presented with this option and a conventional option, will choose a DSCR option for many reasons. One, it's almost identical in cost, and many other reasons to use these programs. They do allow things down here towards the higher end, bankruptcies, foreclosures, as I mentioned before. Some of these may allow us to use alternative rental income calculations, such as short-term rents. We've had some episodes on some of these programs may allow 40-year interest only, mixed use, all kinds of different options once you go down the list here of all the cool DSCR options. So definitely get with our team to find the best ones. And now let's switch over to our topic for today. Let me switch my screen up here. And today we are talking about HELOC Combo Loans. So we just ended with investors, switching back to primary. This is a tool where we can add a HELOC to a standard loan, typically a conventional or other type of traditional loan. This would be for primary, maybe a second, but I'm sure Jose probably only has primary examples, but I'll let him introduce his examples. But it allows us to purchase or, in some strange cases, perhaps refi, but usually purchase a home without exceeding certain limits that would otherwise restrict us. So adding a HELOC to a regular loan could allow us to exceed the loan limits or could allow us to get creative with the LTVs. So I'm sure Jose has some cool examples of specific ways to utilize this program where it can be advantageous to our borrowers. So if you're ready there, Jose, let's go ahead and introduce the HELOC combo.
Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. Great to be with you here this morning. So our HELOC combo has many uses, right? We can use it for purchases, and we can also use it for refinances. Now, one of the most common uses for the HELOC combo, at least one of the most common uses that we have it for, is for our limited review condos, where we are looking to not come in with 75% with 25% down payment, so to speak, right? That's one that we can do with a limited down payment by doing our combo loan. So we can use it for refis also when we're looking to come in with do a refi on the first, rate and term refi on the first, and then do the cash out on the line of credit. So let me show you here our options that we have for our purchases. So first one we have here is for a 95% CLTV with no mortgage insurance. Now this allows you to come in with 5% down, do 80% LTV financing on the first, and then do a line of credit for 15% with a total down payment of only 5%. So again, this does allow you to circumvent paying mortgage insurance. Obviously, you do have the HELOC, which has a little bit higher rate here. You're looking at 14.625 when you do take it up to a 95% CLTV. So in this case, we have our $90,000 HELOC, and we have our $480,000 first loan. So we have 8.124, which is our lowest cost option, and we can buy that down to 7.499. So our second option here is our favorite use of this HELOC combo loan, which is for limited review condo loan. Now in Florida, it's quite an issue because Florida, the limited review condo loans only go up to a maximum of 75% LTV on the first, which would be a pretty big down payment. That's for primary and second homes, it's 75%. For investment, the limited review, and we're talking agency here now, conventional we're talking here, is 70% for the investor. But in this scenario, we can combine a HELOC. So we take this to 75% LTV. So we're looking at a HELOC of 15% of the transaction, in this case $90,000. Our HELOC's 14.625, and we are then combining that with our first loan. 8.124 is our lowest cost option, and you can buy that down to 7.374. And the added bonus on this option also is, again, no mortgage insurance. So now we have the same option, but for a second home. Okay, so it is possible to do the limited review condo combo loan.
I think you got to refresh it. You didn't get rates there.
Oh, sheesh. Well, then I don't think I'm going to have the rates on that one then. Don't know what happened. But you're looking on that one. Again, we were looking at pretty much the same rates on the HELOC as this one, which is 14.625. Our rates were about a half of a point more expensive when we were going the second home. So sorry, folks, don't have that rate for you. And our jumbo buster. This is our final example here, but this is also a favorite use of ours for the HELOC. We call it the jumbo buster because you can purchase what would normally be a jumbo loan with a HELOC, right? So in this case, obviously the benefits of this is that we're using automated underwriting. So we have our streamlined underwriting. That's one of the benefits of using automated underwriting. We also have the benefit of the conforming loan rates, which are usually lower than the jumbo rates.
and the conforming LTV limit.
Yes.
Right?
Yes, correct. Absolutely. Because now we're doing 95%. Right. So again, we do have a little bit lower. Oh, my HELOC rate didn't pop in there either. Their rate's 12.625 on that one. Darn. So again, we're looking at 12.625 on the rate on the HELOC, and then we're looking at these pretty good rates here. 8.124 actually gives you a little bit of a lender credit, and you can buy that down all the way to 7.25. So these are better rates than what you will find for the jumbo loan. And then again, the other benefit of the HELOC is that you only pay interest on what you owe. So one of the benefits of this option is that the borrower can accelerate their payment plan, maybe put themselves on a twice a month. They can spread out half of the payment for the HELOC every 2 weeks. Instead of paying it at the end of the month, they pay 50% of the payment every 2 weeks, and that actually does speed up the equity on the property, because you're going to be continually paying the interest off before it's due. So you will have interest savings, interest expense savings, as well as you're going to pay it off quicker. And remember, on the HELOC, you only pay interest on what you owe. So if you do accelerate the repayment, which is always recommended on the HELOC, never recommended that you just service the minimum payment interest only on the HELOC, because usually then what's going to happen is after 10 years of just paying interest, now that HELOC converts to a 20-year fully amortizing payment. So usually that's the time to either start making those payments or get another HELOC, or just refinance, combine both, and eliminate that issue.
All right, great. I don't see any questions. Once again, another great tool to have on your tool belt here as a loan officer. We want to make sure that we know about every product possible for us to be able to make sure we can provide our clients with all the different options available. So remember, we do this show at 11 a.m. Eastern every single weekday, where we go through the live rates and then we do a deep dive into a different topic. So we'll be back tomorrow with a new topic. We appreciate everybody tuning in. Thank you, Nick. Thank you, Jose. And we will see you tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone.
Thanks, everybody.